Here's the big question. You're interested in value investing and valuing and evaluating businesses on a deep level, but you don't know how, even after researching for hours, probably dozens of hours, hundreds of hours on the internet, and because nobody else shows you how to do it. This podcast has all those answers and much more about value investing in finance. My name is Jason Rivera. Welcome to Value Investing in Your Car.
Hey, Jason here. In this episode of Value Investing in Your Car, I'm going to tell you what risk is and is not as a deep value investor. Before we get to that, you're probably noticing the camera quality here is not great. I got a new computer, and apparently the video quality in terms of my camera right here is just shit. So I'm going to fix this. Hopefully by the next time we do another video where I require you to see my face on one of these videos, I'm going to get an adapter or something, and I'm going to figure it out. But that's, if you're watching the video, why the quality is so terrible. Figured a brand new computer would have a decent camera. Apparently not. So I'm going to fix that. Again, hopefully by the next time we do one of these videos that requires my computer and my face. So, also, before we start, I want to remind you that this series is now a podcast that you can listen to free for anywhere in the world. Available on iTunes, Android, PC, SoundCloud, Anchor, Spotify, Podcast Go, podcast.com, and many more. So if you want to listen to this series as a podcast, make sure to do so. And it's for free anywhere in the world. So what I want to talk about today is risk. The stock market has been pretty crazy lately. It's been going up by 200 or 300 points, then it's been falling by 500 points, then it's been falling by 500 or 600 points, then it's been going up by 200 or 300 points. And this freaks a lot of people out, to be honest. I don't care what the stock market does, but I've been doing this for 12 years. So I've kind of trained myself out of that. When I first started investing, I struggled with this as well. Actually, for probably a couple of years, I struggled with this. But I will get to kind of some of my tips to train stuff out, or train you out of that kind of mindset of, oh no, what's my stock doing on any given day? Or, oh no, what's the stock market doing on any given day? That type of thing. Before we get to that, though, I want to tell you what I view risk as a long-term value investor. Risk is not knowing information. Risk is potential loss of capital. Long-term and sustained loss of capital, meaning you made a mistake in your analysis, and after you bought the company and you realize it and you lose money on the transaction. Risk is the company going bankrupt if they have debt. Risk is not having enough cash flow to cover payments to suppliers, advertisers, marketers, distributors, whatever, employees, whatever the case may be, of the company you own. Risk is not having a strong balance sheet. These are legitimate, not leaving enough margin of safety in your valuations, not being conservative in your valuations. That's a huge risk. These things are real world risks that I view as risks as a deep value investor. I do not view stock volatility as risk. I do not view low liquidity as risk. I do not view beta whatsoever as risk. I do not view 500 or 600 point gains or losses in the stock market as risk. I don't view any of this as risk. And if you come from kind of a financial background in either investment banking, finance, some kind of bank, some kind of corporate finance job, what else? University finance departments, they talk about a lot of risk being volatility. Essentially, it's measured with beta. The more a stock moves, according to this metric, either up or down, the more risky it is. I don't view that as risk at all, not even a little bit. It's never made sense to me. It's one of the main reasons I don't use DCF valuations, because I don't view volatility as risk, and beta goes into the DCF calculation. Those are not risks to me. I don't care what my stock does or what the market does over even a short or medium or long term. Long term, it's going to go up. It's gone up for 150, 200 years now, whatever it is. Pretty much straight up because of inflation. It's gone up. I believe it will still continue to go up. There will be another recession, depression, whatever the case may be, probably sooner rather than later. But over the long term, stock market will likely continue to go up as long as the United States and the rest of the world continues to become more productive, produce more, become more, eradicate poverty more, people become more wealthy, all these kind of things. The stock markets around the world will generally continue to go up. Yes, there will be 5-10 year periods where the stock market is down or about flat, but in general, over time, it will continue to go up, in my opinion. So you should be in stocks. You should be in investments of pretty much any kind over the long term, because that's how you compound value. But so those are what I deem as real risks versus not real risks. I come at this from a very different perspective than many value investors or investors who went to university and studied finance, who work at a corporate finance job, who work in an investment bank. But this, sorry, there, I got a call there. But these are more real world risks, in my opinion, and actually real world experience than beta and volatility and stuff like that I can't control. So those are what risks are and are not to me from a real world deep value investing perspective. So how did I train myself out of worrying about things like the stock market going up or down by 1,000 points in a day, my stock going up or down, individual stock going up or down by 25% in a day on no news? I don't look at the financial news. I get updates to my phone. I have Google Pixel, so I automatically get my news feed on my phone, and it has me follow things like the stock market and world events, and it shows up kind of major events on there automatically by itself. But I don't follow the news other than that, not whatsoever. Actually, you can pay me to watch the news because it's so negative, it's so horrible. They never really show anything positive on financial news or world news. I don't read or watch the news whatsoever. I'm cognizant, again, of major events that happen as they happen because of that Google Newsfeed thing on my phone. But other than kind of seeing the glancing title of whatever it is and where it came from, where the article's from, or where the video's from, I don't actually read the article most of the time. That's number one. Number two is on my phone, I have an app. What's it called? It is Personal Finance. Just an app on Android. I don't know if it's on Apple or not. I have an Android. I put my stocks in there that I own, and I have them in there so I can see news when I want to see news, but I don't look at news on the companies I own at all. I get sent Google Alerts. I have Google Alerts sent up that sends me important news, but other than that, I don't check my stock's price. Maybe once a week, maybe once every 3 weeks, probably. It's probably closer to what I actually do. Again, I do these two things. These are the two major things that help me cut out my kind of emotions, because when I first started, I would legitimately check like 10 times a day, and I was just wasting time checking on that kind of stuff. Does you no good. Takes emotions out of it. Lets you do more productive stuff, lets you learn more, all this kind of stuff. So those are the two main things I do. And people think I'm nuts when I tell them that. They don't. Some of my students actually, they're like, You don't follow the news or any macro stuff, or other than kind of seeing headlines. You don't look at your stock prices. No, I don't. I own, in the portfolios I manage, I think I own right around 7 stocks right now, and I could give you a range of probably where they're at, most of them. But other than just pure guess, I don't know what their share prices are. I don't know if they're up or down. I know they're up from when I bought them, because I've owned them for so long. But I couldn't tell you how much they're up, what even percentage they're up, if they're down a little bit, because they've gone down since the last time I looked. I don't know, to be honest with you. Again, I do this to take out emotions, which alleviates fear, which alleviates me from making illogical mistakes, and doing stupid stuff when I shouldn't be doing stupid stuff, and it allows me to be more productive, learn more, all that kind of stuff. Sorry, my cat keeps hitting the computer here. So that's what I do to manage my emotions when it comes to risk and viewing stocks and viewing news and that kind of stuff. I just use my time a lot more productively than I used to, be honest. And if you do these 2 things, cut out the news, whether it's financial news, whether it's world news, whether it's regional news, whatever. Of course, you need to be cognizant of what's going on in your arena or industry or country or city or state or wherever. But you can easily use Twitter or Facebook, or even if you have a Google Pixel, it automatically comes with that Google News feed, I think is what they call it. I don't even know what they call it. It was set up on the phone automatically. But it can check what you're interested in, or it sees what you're interested in, and it will automatically populate results in there. And if you cut out news, financial, again, all this kind of stuff on a daily basis, or even, I used to look at the news pretty much constantly. I used to read the financial news in the morning, and I used to watch regular news at night, and it was just a giant time suck and put me in a terrible mood, to be honest with you. So I stopped doing it. And if you can cut out looking at your stocks prices and stock kind of fluctuations, that will help you as well. Again, take fear out of it, take emotion out of it, help you be more productive, help you learn more, because you can spend your time being more productive. So those are kind of the main things that I do to eliminate risk when it comes to looking at my stock market. In terms of value investing specifically, and actually life, margin of safety is a huge one. I use a massive margin of safety in pretty much everything I do, whether it's my business accounts, whether it's driving, whether it is fishing. I always want to, or taking my kids out somewhere, I always want to be prepared. For example, I have a 10-month-old right now, and we have to still make sure we have enough food for her, whether it's bottles or what we call big girl food, the stuff in the canisters. We have to make sure we have enough diapers. We have to make sure we have all that kind of stuff. For my middle daughter, she's allergic to fire ants. She got bit one time and she just puffed up really bad. So we have to make sure we have to have that EpiPen with us at all times. So margin of safety is another way to alleviate massive amount of risks. And that can come, again, in everyday life, valuations, bank accounts, whatever. What else? Those are some of the main things I use to alleviate risk. Another one I do is to do a ton of research, and to make sure I'm intimately familiar with everything I invest in. For a specific example, we just finished up the ASX FY case study a couple weeks ago now, 2-3 weeks ago now. I estimated with my coaching students that combined between actually doing the actual research, setting up for the blog, doing the videos, all that kind of stuff, doing the webinar, all that kind of stuff, probably easily 200 hours plus. And normally when I don't do that kind of stuff, I still put in 100 hours over every company I research. I do this because I want to know every piece of information I can. I want to make sure I calculate everything myself, that I know the company intimately, that I know its competitors intimately, that I know where it can improve, where it's doing great, if it has competitive advantages, all these kind of things. If you're not willing to put in the work, preparation, I guess, is the best way to put it. Being prepared and on top of things is the best way in my opinion, or one of the best ways, along with these other things I've already talked about, to alleviate risk. Those are some of the main things, or those are the main things that I do to alleviate risk, is preparation, extreme preparation. Actually, it's funny, my wife and kids and some of my friends and colleagues are like, man, you're always prepared. I'm like, thank you. First of all, thank you. Second of all, I do that because I want to be ahead of the game, which I'll talk about in a later video about excuse me, the closing and the selling of my house that I'm in right now, and the buying of another house, being prepared, and all that kind of stuff. So I'll talk about that in another video sometime. But those are the main things I do to get rid of emotions, alleviate risk, and those are my versions of what risk really is in a real world value investing sense, and what things really are not, or what things when it comes to risk really are not important. So I hope you found this video of value. If you're listening on the podcast, thanks for listening. I hope you found the podcast of value. Again, sorry about the video quality. I'm going to fix that. Again, figured a brand new computer would have a decent camera. It does not. So yeah, it's terrible. Sorry about the video quality. If you're watching the video, if you're watching, or if you listen to the podcast, you won't have to worry about that. You won't be able to see the pixelation that's going on right now in the non-high def video that's driving me insane right now. So thanks for watching. Thanks for listening. As always, make sure to subscribe and hit the notification bell if you're watching on YouTube, so you're notified anytime we're releasing a video, and we're up above 500 videos at this point now. If you're listening on the podcast, make sure to subscribe, love, share, comment, all these things. Comment anywhere, like, love, share, comment anywhere. I respond to all comments myself. And thanks for watching, and I'll talk to you again soon. And hopefully, again, you won't have to see this pixelation next time we do this kind of video. So appreciate your patience, and I'll talk to you again soon. Thanks. Have a good day. Bye.